Hey everyone, I'm Dave. Welcome back to Dave's Market Explorer. Today we're diving into the current market setup, the critical role of time and timing, recent insights from Tom Lee, and why Bitcoin's bullish divergence on the weekly chart could be signaling leadership for the broader market as we navigate this summer period. As of early July 2026, the S&P 500 has shown resilience but remains in a corrective phase. We've seen the kind of volatility many expected in the June-August primary seasonal window, with choppy action, rotation out of some crowded tech trades, and pressure on AI-related names amid profit-taking. This aligns with historical patterns in midterm years where summer often brings digestion after strong prior gains. Importantly, the S&P 500 could still potentially put in a new high, but that does not negate the time target corrective window we're operating within. Time and timing remain central to my analysis using tools like multi-timeframe systems, Fibonacci projections, and cycle awareness. The June-August window has delivered that expected pullback or consolidation, consistent with seasonal weakness and prior midterm year behavior. We also have a secondary time target extending into October, where additional digestion could occur around key events like Fed transitions and potential supply pressures. These aren't random, they're windows where momentum often shifts, offering opportunities for prepared traders. My MTF-SRG framework and volume profile work highlight these inflection points, emphasizing process over prediction. Stay disciplined with entries, risk management, and time-based exits. Tom Lee from Fundstrat has been spot on in recent appearances, including his latest macro minute. He continues to view 2026 as a year that could mirror last year's pattern, strength early on followed by a drawdown that feels like a bear market, potentially 10 to 20%, before a strong recovery. He's highlighting factors for buying the dip into the second half, stressing earnings visibility, AI tailwinds, and policy support. Lee sees the current turbulence as a buying opportunity rather than the end of the bull cycle, with potential for double-digit gains overall. His outlook reinforces patience through volatility, especially with a new Fed chair and other catalysts resolving later in the year. Bitcoin often leads the broader market, and right now it's flashing a classic bullish divergence on the weekly timeframe. Price has made lower lows recently, but momentum indicators like RSI are forming higher lows, a rare signal that previously marked major bottoms and preceded massive rallies. This setup suggests selling pressure is exhausting, positioning Bitcoin as a potential hedge and leader out of any summer lows. With Bitcoin holding key long-term support zones near its 200-week moving average, it could pave the way for risk assets if it confirms the reversal. This ties directly into macro liquidity and debasement themes we've tracked. Putting it all together, we're in that anticipated June-August correction window with a possible extension toward October for full digestion. Tom Lee's framework gives us a bullish big-picture lens, use dips as opportunities. Bitcoin's technicals are providing early leadership signals. For traders, focus on your systems, watch multi-timeframe alignments, volume profiles, and time projections. Stay process-oriented, manage risk, and remember markets reward preparation. This environment is challenging but full of setup for the next leg higher. What are your thoughts on the timing windows or Bitcoin's divergence? Drop them in the comments. If you found this helpful, like, subscribe, and hit the bell for more market timing and analysis. Thanks for watching, stay disciplined, and I'll see you in the next one.